हेलो हेलो।
यस सर।
आवाज आ रहा है भाग्यश्री मैडम मेरा?
यस सर।
ओके ओके। अभी तक 7 ही मेंबर ज्वाइंट हुए आज।
जी सर।
आदित्य भाई। हेलो आदित्य।
सर उनको भी मैंने को होस्ट बना दिया है सर।
हाँ पर वो सुन नहीं पा रहे ना, उनका एक ट्रायल कर लेते ना एक बार स्क्रीन।
चले, हाँ बराबर है सर।
फोन लगाता हूँ मैं उनको।
बोलिए ना सर। हेलो हेलो, बोलिए। मेरा आवाज आ रहा है क्या?
यस सर, आवाज आ रहा है सर अभी आपका।
ओके। ओके, पीपीटी तो चालू किया ना? ललित सर उनके ऑफिस में होंगे ना आई थिंक।
साकेत भाई 5 मिनट रुक जाते हैं। श्रद्धा मैडम
कोई
5
नहीं
मिनट। ओके। श्रद्धा मैडम आवाज आ रहा है क्या आपको?
हाँ सर,
हाँ
एकदम अच्छे से।
मेनी मेंबर्स आर ज्वाइनिंग राइट नाउ। श्रद्धा मैडम, I request all the members to keep their phones on mute mode so that we can start the program. तो जो भी को होस्ट है ना, अपने आप को म्यूट रखिए, जब आपका समय आएगा तभी आप उसको अनम्यूट कीजिए. ओके.
Good evening, everyone. Please keep your phones on mute mode so that we can carry out the session efficiently. I request all of you to please mute your phones.
Okay, Shraddha madam, please start the program.
Good evening, everyone present over here for our today's session on recent changes in GST and inherent issues. I, CA Shraddha Agrawal, take privilege on behalf of Amravati branch of WIRC of ICI and welcome all the members in this session. Now, I also welcome our speaker for today's session, CA Khandelwal sir, who will make his deliberations on GST. So, without wasting a moment, I now request our chairman, sir, CA Vipul Patel, sir, to please give the welcome remark.
Thank you, Shraddha ma'am. Before two VCM on auditing standards, you are the speakers for that session, and now today you are handling the MOCs. So I am very happy that very young members are coming forward and showing interest in branch activities. I think this is the best platform where you can nourish yourself because you are delivering in our members only. So definitely if there will be a mistake, it is acceptable. So I am very happy all you are coming forward. B.S. Saket, Bhagyashree madam, you, Parag bhai, and all other members who are joining in various activities of the branch. So thank you all the young members who are showing an interest. Not only young members, as a listener, various senior members are also joining through our virtual mode. So we are able to displaying the knowledge across the various section of members. So this is our 9th virtual committee meeting after being made compulsory. So I welcome on the behalf of Amravati branch, I welcome all the members, friends in managing committee, CA Sunil Agrawal, today's very learned speaker, CA Aditya Khandelwal, CA Lalit Tambi sir, Atal Saab, who is giving our closing remark for today's session. So welcome all of you once again for this very important meeting on recent changes in GST and inherent issues related with these changes. फ्रेंड्स मुझे ऐसा लगता है कि काफी सारे कंप्लायंसेस में हमें छूट मिली हुई है, बट इस छूट के साथ में काफी सारे इश्यूज भी है. तो आई थिंक इट विल बी बेटर वी विल गिव मोर टाइम टू आदित्य टुडे because he is very learned, very having deep knowledge in this subject. So on the behalf of Amravati branch, I am very much thankful to Aditya for giving your time and guidance for our members. So thank you everyone. Over to Shraddha madam.
Thank you, sir. It's because of you. You are the mentor of our, you are mentoring us, and we are just moving ahead because of your guidance. We all want a leader like you. Okay, so now I request CA Lalit Tambi sir, who is the session chairman, to please give his opening remark.
Thank you, Shraddha, and hope I'm audible to all.
Yes, sir. Yes, sir.
Yeah. Thank you. Good evening to all. And after a much awaited respite in the form of rain today, and we'll be sure having a respite in GST provisions also. Well, there are a lot of recent amendments in GST due to this impact of COVID-19. And
Lalit sir, can you start your videos, please?
oh yes, yes.
Yeah, now you are visible also.
Okay.
सर काफी दिनों के बाद में आपको देख रहे हैं तो आपका चेहरा देखने की इच्छा थी सर.
Okay, yeah.
आप अभी बिजी थे सर. Thank you so much for today's session, sir.
Oh, thanks, Vipul. Okay, there are a lot of recent amendments in GST due to this impact of COVID-19, and many of them are retrospective in nature also. Though these relaxations and curative amendments are the welcome step, but one has to really look between the lines to understand the real nature of the amendments. For example, there is a relaxation to file return from July 2017 to January 2020, and this window is opening up on 1st of July 2020 itself. Meanwhile, for the period February to May 2020, the due dates may be over by the time the say non-compliant dealers may be wanting to comply, and they would be liable for this late fees for this period of say February to May 20. So there are amendments, and sure that we need to understand them between the lines. And also there are some practical issues we may be facing due to this COVID-19. For example, if some supplier wants to postpone his sales of say February or March 2020 due to say non-availability of funds for paying GST, he may want to postpone it to the later months. But in such cases, the ITC which is being claimed by the purchaser shall get hampered, because we know that the relaxation of that 20% of ITC is shall be that will be implemented with effect from say September 2020. So that 36(4) claim of ITC shall be restricted, and for that purpose, the claim for the period of February to August 2020 is going to be consolidated in the return of September 2020. So we need to make the trade aware that this issue is going to crop up within a time span of 2-3 months, and there cannot be much postponement of sales or liability, so that the supplier gets hampered. His ITC would be in trouble. So it is imperative to understand, it is the need of the hour to understand the recent development and issues. And with these opening remarks, I congratulate Amravati branch of WRC of ICAI, Chairman Vipul, Vice Chairman Sunil, Pawan, and all the esteemed members, executive members, and also express thanks to our Amravati branch for organizing a webinar on this subject with a learned and very studious speaker like C. Aditya Khandelwal. Thank you very much for listening to me. Thanks. Over to the MOC, please.
Thank you very much, sir. Now, I request CA Bhageshri Sonkusare to give a brief introduction of a speaker for today's session.
Thank you so much, Shraddha ma'am. Am I audible, ma'am?
Yes.
Thank you so much. Good evening, one and all present here. Myself, CA Bhageshri Sonkusare, welcomes you all in this beautiful evening. It's raining in Amravati. It's our tea time also. So let's enjoy the session with a cup of tea also. Today's topic is recent changes in GST and inherent issues by C. Aditya Khandelwal sir. C. Aditya Khandelwal sir is a partner in JS Khandelwal and Company and is heading indirect taxes practice of the firm. He was formerly engaged as indirect tax consultant with a leading indirect tax firm in Mumbai. He has been practicing in the areas of indirect taxes like MVAT, central excise, service tax, customs, foreign trade policy, and now GST. He has been involved in advising various MNCs and Indian conglomerates in sectors like manufacturing, financial services, entertainment, logistics, information technology, gems and jewelries, real estate, and etc. He has also been involved in making representation to the Ministry of Finance and the state governments in relation to various tax policy matters. He has also conducted GST impact analysis for various organizations and making them ready to implement GST in a smooth and phased manner. He has also been conducting workshops on GST for managerial personnel through various corporate training platforms. He has also delivered various talks on GST on diverse forums. He has also contributed articles on various subjects in indirect taxes in newsletter of ICI and other associations of chartered accountants. I welcome you, sir, and welcome you all for giving your precious time in this session. Over to Shraddha Madam.
Thank you very much, Bhageshri. Now, without losing a single moment, we are very impatient to listen to our speaker. I hand over to our speaker, sir, and request all the members to please put off your video and mute your audios so that we can carry out a session in a smooth and efficient manner. Over to speaker, sir.
Thank you, Shraddha ma'am. Thank you, Bhageshri ji, for such a beautiful introduction. Am I audible to everyone now?
Yes, sir, you're audible.
Is the video visible? I mean, am I on the video?
Yes, your screen is also visible.
Okay, thank you. First of all, I would like to thank Amravati branch for giving me such a wonderful opportunity to share my views with the members of the branch and also others who have joined the webinar. And it has always been a privilege to speak in front of the learned members of the Amravati branch, the chairman, sir, our chairman, Vipul Patel, sir itself, then the introductory remarks as given by Lalit Kambi, sir also. He mentioned he mentioned me as a studious faculty. We shall not forget the tremendous studies that is brought in front of us over the period of time. We have listened to him on various aspects, especially on the budgetary remarks.
Sorry to interrupt, sir. Actually, we cannot see you. I think you have stopped your video.
आदित्य सर वीडियो ऑन कर लीजिए आपका.
Please put on your video. We are not able to see you.
I have switched it on.
But we cannot see you actually.
एक मिनट सर, एक मिनट. Okay, sir. Okay. Now you are visible.
Visible now?
No, not visible to me, sir.
Okay, ठीक है आदित्य, आप चालू रखिए, सेशन चालू रखिए, no problem.
Okay, no issues.
Okay. So today the topic that has been given to me is recent amendments in GST and inherent issues there. There have been many issues. It is not because of the amendments that have taken place. The inherent issues means issues that had always been there since the inception of GST. We'll bring a light upon that. We'll put some light upon that, and also the amendments that have been brought since COVID. We'll look into that also, and the issues that these amendments will bring into our daily practice. So let's start with it. First one is we are going to take all the notifications that have been issued since 18th of March 2020. 22nd was the first. 22nd of March was the first. We can say curfew. It was Janta curfew. We are starting from that period itself. So first notification in the COVID had come on 3rd of April. That is notification number 30/2020. So it is for the opting of composition scheme. Usually the composition taxpayer had to inform before the start of the financial year that he is going to opt for composition scheme in the coming financial year. So due to COVID impact, this due date has been extended, and CNP 02 will now have to be filed by 30th of June. It is now arriving. Then ITC 03 was required to be submitted within 60 days from the inception of the financial year, in which a dealer taxpayer has opted for composition scheme. Now that date has been extended to 31st of July 2020. Now this is for the opting of composition scheme. What about the opting out of composition scheme? Opting out of composition scheme starts the day when you apply for it. Say if I opt for applying out of composition scheme, that means I want to be a regular taxable person. From today, I'll have to apply today, and that particular I'll be registered as a regular taxable person from today itself. But what about a person who wants to opt for regular tax as a regular taxable person since 1st of April 2020. Because of COVID impact, everything was shut down. He might not have been able to contact to his CA also for opting out of composition scheme. Now, what can be done in this regard? See, no notification, or I don't think this situation was even imagined at the council meeting also about the opting out of composition scheme. Now, representation has already been made in this regard with the state authorities also and with the central authorities so that it can be escalated up to GST Council with regard to the opting out of composition scheme. Right now, the time when you make an application for opting out of composition scheme, you will be given registration as a regular taxable person since from that date itself, or you can also opt for a subsequent date. But there is no provision for going backwards as of now. Then an important notification has been issued with respect to matching of GSTR 2A. A lot has been discussed in this regard since 9th of October 2019. This was the day when the first notification implementing this Rule 36(4) was brought into picture. Initially, it was 20%, then it was subsequently reduced to 20%, 10%. So the rule is whatever is reflecting in your GSTR 2A, whatever the credit is reflecting in your GSTR 2A, plus 10% is what you are eligible to take if your GSTR 2A doesn't match with your books of account. That means if your GSTR 2A has a credit of 100 and your books of account has a credit of 200, your credit that you will be eligible to avail is 100 plus 10%, that is 110. So this was the rule that was made applicable since 9th of October 2019. Now, what is the validity of this rule? We'll discuss this. This is the inherent issue that is what we're going to discuss. So, firstly, the amendment in the COVID period has been brought for the period February 2020 to August 2020. That means whatever the credit is reflecting in your GSTR 2A for the period February 2020 to August 2020 will be consolidated together, and then the 10% criteria will be applied. Now, as Lalit sir was mentioning about the postponement of liability by the supplier, see, due to lack of funds, he might, though it is not allowed in GST law, we have got time of supply provision in picture. If goods are supplied, that means invoice has to be raised. This is for goods. So invoice has to be raised. So if any invoice is raised by March 2020, it cannot be shifted in April 2020. But by any chance, if it has been done, if liability of March 20 is postponed, then what is the maximum extent till which a supplier will be able to postpone it? See, if business was shut down in April, maybe he wanted to postpone it to May, then to June. Now lockdown is open. Now goods have been supplied. There may be some issues in the stock reconciliation also. Now he'll issue the invoices. See, for February to August, it is the consolidated matching of GSTR 2A. So even if a purchaser has reflected his credit in return for the month of March 20, and his supplier has reported that particular invoice in the month of, say, June or July 20, then in the consolidated matching also this credit would come in your GSTR 2A. So any which way supplier is eligible to, recipient is eligible to avail that credit. Section 16 gives you the condition in which you can claim the credit. You must have the invoice. So receiver must be having the invoice. Then goods must be received. Actual goods must have been received by the recipient. Then supplier must have paid the taxes. In fact, it is not the supplier that must have paid the taxes. It is taxes must have been paid. So even if it is reverse charge say for case of raw cotton supply, the recipient would have paid the taxes, or supplier may have will be paying the taxes as soon as the staggered extension is over. So that condition would also have been fulfilled. Then the return under section 39 must have been filed. So supplier will be filing his GSTR 3B of say June or July, including this supply, and recipient would also have filed his 3B for the month of March. So all these conditions for availing the ITC must have been fulfilled. That's why there is no bar in the law to avail such credit. Now, the validity of Rule 36.4, this is the inherent issue. Now, what is the validity of this rule? Normally, Rule 36.4, Rule 36 in the Central Goods and Services Tax rules talks about the filing and matching of credit. So, if it has in sub-rule 2 mentioned about GSTR 2 also. Now, we'll have to take this into account that GSTR 2 is yet not effective. And by what authority of law has this Rule 36.4 been implemented? Now, if we see notification 49/2019, it says that this rule will be applicable or is issued under section 164. Now, section 164 is the general section. Section 164 says wherever there is difficulty in implementing a law, a rule may be issued by the central government for ease of implementing these laws, or wherever the words such as prescribed or as may be given are discussed in the law or are given in the law, rules may be framed under this section. Now, if we see, there are specific section 42 and 43 for matching of the credit. Now, section 43A is also there, but same has not been brought into picture, or we may say same has not been implemented by any notification. It is there in Finance Act number 2 of 2019, but it is yet to be given effect. Now, in the absence of section 43A, there is no provision about matching of credit under section 42 and 43A, which says that I do have to look into my GSTR 2A. Okay. Even if it says that GSTR 2A should be looked upon, we know that those provisions were given in the time considering that GSTR 2 will be in the picture, and whatever the credit that has been missed out by my supplier and as reflected to me in my GSTR 2A will be furnished by me in my GSTR 2. Now, in the absence of this GSTR 2, can department deny my credit just because of the fact that it was not mentioned by my supplier in his GSTR 1? Now, one more issue is there. What if supplier has reflected that supply in his B2C? In section B2B and B2C, if we go by the provision of section 16 of this GST Act, it says taxes must have been paid. So if my supplier has reflected something in this B2C and has paid the taxes of it upon it, so I should be eligible to get the credit. So that condition is fulfilled. In fact, all the conditions as laid down in section 16 of the GST Act are fulfilled at the time of availing the credit. Now, we cannot, and this matching of credit is not the condition which is given in section 60. Invoice should be there, taxes must have been paid, goods must be received, and return under section 39 is filed. So these are the only 4 conditions which should be fulfilled. Now, Rule 36.4 says I am eligible to take only that credit which is reflected in my GSTR 2A. This is coming by rule, not by the section. So if we go by the section, this rule does not have any authority as of now, is what I feel. Even though the department or CBI is of the view that section 164 is the general section by which we can implement the provisions which were to ease the implementation of the act. We can bring in the rules which can is the implementation of the act. So according to me, in the presence of specific section, that is section 16, and reversing section of section 42 and 43, we cannot implement, or we cannot say to implement rule 36(4) under section 164 because there are specific provisions. And also the provision for reversal of credit being not reflected in GSTR 2A, that is under section 43A, is yet to be made applicable. Again, we'll have to go through certain decisions of the honorable high courts and supreme courts where they have specifically mentioned about the position of a purchasing dealer when a supply is not reflected by supplier in the return. So first judgment of this litigation has been going on since ages, but the recent judgment is what we'll have to take into consideration because it depicts the recent position of the trade. Now, ITC cannot be denied on default made by the selling dealer. This is what Jharkhand High Court has said in case of Tarapur and Company. Then one of the famous judgment or landmark judgment that we would say has come in 2019 in case of Arise India Limited, as given by the Delhi High Court, that department is precluded from denying ITC to the purchasing dealer who has bona fide entered into a purchase transaction with a registered selling dealer who has issued a tax invoice reflecting the TIN number. In the event that selling dealer has failed to deposit the tax collected by him from the purchasing dealer, the remedy for department would be to proceed against the defaulting selling dealer to recover such taxes. See, this is important. The department would be proceeding against the defaulting selling dealer and not against the buyer. So, in light of this also, and for the sake of natural justice also, why would you ask buyer to pay the taxes which he has already deposited with the seller and who was supposed to pay it to the government in the government treasury? Being a bona fide dealer or buyer, I should not be asked to pay taxes which I have already paid. And one more important thing is, then what would happen to this basis of indirect taxation? Indirect taxation, the complete chain depends upon you collect the tax, you reduce whatever you have paid, and remit the balance to the government. Ultimate tax has to be borne by the end user. Now, this is going to break the chain if you collect the tax from the buyer and also initiate the tax instead of initiating the defaulting provisions or against the selling dealer. So this was the landmark judgment of 2019, that is Arise India Limited. Department against this judgment had filed a plea in the Supreme Court. This was the judgment of Delhi VAT Act, and plea against this judgment was filed by the department in the Supreme Court. But Supreme Court has upheld the decision of this Delhi High Court by rejecting the plea of the department, which means now Supreme Court in this issue has given a stand that ITC cannot be denied to a bona fide purchaser or where seller has not deposited the taxes. One more thing is two more things which were discussed in this judgment were, one is the colluding dealers and one is Article 14. The Delhi High Court has very well explained that if you initiate proceedings against the buyer for taxes which were not paid by the dealer, it would affect or it is against the principles as laid down in Article 14 of the Constitution of India. I would then also the colluding dealers, if the buyer and purchasers both were of the malafide intentions, then definitely department can go against the buyer also and seller also. Now, Coming to Maharashtra, the Bombay High Court, in a landmark and important judgment of Mahalakshmi Cotton Ginning, which was delivered on 11th May of 2012, said that department can go against the against the buyer for whom taxes were not deposited by the supplier. However, if department is able to collect tax from the supplier, then whatever has been collected from the buyer shall be refunded back to that buyer. So this is the principle. It means this decision has also said that tax can be collected only once upon a transaction. Okay, important thing. And this decision says that if you are going against the buyer for taxes that were not paid by the supplier, this won't offend Article 14. Now, important thing is, if we see all these judgments, judgment of Jharkhand High Court and Delhi High Court are saying some different things than what Bombay High Court has said. But one thing is common, that is taxes has to be collected once. In Mahalakshmi Ginning also said that if you are going against the buyer for recovery of taxes, or that means you are denying the input tax credit claimed by the buyer, and subsequently you are also going to collect the taxes from the supplier, then whatever has been collected from the buyer can be repaid to that buyer. Okay, so this is important thing. One more article of the Constitution of India, that is Article 19, should be read once by everyone in this regard. It says about the right to do business. Okay, every person in this country, the people of India are it is in their very much right to do the business. However, Article 19 comes from the directive principles of state policy. What are the directive principles? That means these are the certain rights which should be given, not shall be, it should be given to the people of India, or the people of abiding this constitution. But these rights can be given with certain riders. So in many of the decisions that you would come across relating to ITC, wherever the constitution has been challenged, constitutional validity has been challenged, it is observed that many courts said that ITC cannot be taken as right. See, this you will also observe in the judgment delivered by Bombay High Court. The right to obtain a set-off is a right conferred by the statute, and legislature, while recognizing an entitlement of the set-off in certain circumstances, is lawfully entitled to prescribe the conditions subject to which the set-off can be obtained. Means, if according to Bombay High Court, if seller has not deposited the taxes, buyer should be denied ITC. So this is what observed by the Bombay High Court. That's why it has said that it is not offending Article 14 vis-a-vis, and also Article 19, Clause 2. So what we have to take from this scenarios or the ratio that was given by the Mahalakshmi Cotton Ginning was on some different footings as the ratio that is given by Arise India Limited and Tarapur Company by Delhi High Court and Jharkhand High Court respectively. So in the present scenario, we would take cognizance of these two High Court judgments, which one of which is also upheld by the Supreme Court in our case of Rule 36(4). So if a supplying dealer is not depositing the taxes, or might have deposited the taxes but has not reflected same in his GSTR 1, which is not a written but a statement, okay, then department do not ask the purchasing dealer to reverse the ITC or pay those taxes. So this is a very wide point. Moreover, there are two judgments, two petitions that are still pending with the Bombay High Court on the same issue. So even if we see the constitutional validity or upon the constitutional validity, more or less the two High Court and Supreme Court has given that denying ITC to the buyer would violate Article 14 of the Constitution of India. And Supreme Court being the apex court of the country, the ratios of the judgment delivered by the Supreme Court can be implemented or applied on the cases that are going across the country in front of any of the high courts. Now, moving further, the benefits, the initial benefits that were given by the government post-COVID or in the COVID period. First one is interest and late fee benefits for the period February to April 2020. Now, if aggregate turnover for a preceding financial year exceeds 5 CR, then GSTR 3B for the period February, March and April has to be filed by 24th of June 2020. That means day after tomorrow. So for the period February, March and April, GSTR 3B has to be filed by 24th of June 2020. But whatever the payment was there in the return, should have been made within 15 days of the expiry of the base due date. That means if, say for the period February 2020, your liability was 5 lakhs. That 5 lakh has to be deposited within 15 days from March 20, 15 days if we count comes on 4th of April 20. So the amount of 5 lakhs would have to be deposited by within 15 days. And how it will be deposited? This amount will be deposited merely by payment of in your GST challan. Okay, there is no need to we can say set off it in the return. Normally, if we see the mechanism what this GST law has brought, filing of return means the payment of taxes. Return filing, they have excluded payment of taxes or differentiated between payment of taxes and they have not differentiated between payment of taxes and filing of return. That means if you want to pay a certain amount of taxes, you'll have to file the return, otherwise your liability won't be set off. But considering all the notification, extension notifications or waiver notifications that have come from July 17, the first notification had come in August 17, wherein it was said that due date for filing GSTR 3B for the month of July was extended up to 28th of August 2020, but payment, 20th of August 2017, but payment should have been made by 22nd of August 2017. So the notifications that have come have differentiated between payment of taxes and filing of return. However, this is not the mechanism of the law, but since it is the beneficial provision, we can also say that we can make the payment, or we have to make the payment within 15 days and later on we can file the return. Now, if payment is not made within 15 days from the basic due date, then an interest at reduced rate of 9% could be made applicable. For the initial period of 15 days, there is no return. Then after 15 days, there is no interest. Then after 15 days, there is an interest at the rate of 9%. But a condition is there that your return for the period February, March and April should have been filed by 24th of June 2020. That is day after tomorrow. This is a conditional extension. We'll discuss this later, but this is a conditional extension. This is not the extension of return. This is merely waiver of interest and late fee. Now, for assessees who are between whose previous year turnover was between 1.5 CR to 5 CR, your due date for the month of February and March 2020 for GSTR 3B is on 29th of June 20. For the month of April, it stands at 30th of June 20. Up to 1.5 CR. For February, it is 30th June. For March, it is 3rd July. For April, it is 6th July. So, in all these cases, there is no interest rate. That means if you are filing your return by the given time, by the prescribed time, so even if it is been filed late, there is no interest on these on filing of these returns or whatever the taxes are there contained in these returns. The important idea is interest waiver has been made applicable by amendment to section 50 and late fee waiver is given by amendment to section 147. There is no amendment to section 39 which says which prescribes the due date of filing your return. Okay, this is the section under which it is said that GSTR 3B is filed. Leave aside the AAP judgment of the Gujarat High Court. Okay. The notification has also come in this regard that GSTR 3B is written under section 39, which is again challenged. But if we consider it so, then there is no extension in filing of GSTR 3B, only a conditional extension that if you filed by the given time period, then your interest or late fee would be waived. There is no actual extension under section 39. Mind this provision. This will come into we'll again refer to these provisions when we'll discuss about the availability of ITC. Now, one more extension has come that earlier we had discussed about the extensions for the period February, March and April. Now this is extension for the month of May 2020. Turnover, if turnover is more than 5 CR, then earlier due date was 20th June, revised due date is 27th of June. This is by way of notification. We are not discussing the press release as has come on 12th of June 2020. Okay, we are not discussing the GST Council recommendations of the GST Council meeting as of now. We will discuss those separately because there are no notification. There is no notification that has come to give effect to those recommendations. Okay, the current position is your return for the month of May has to be filed by 27th of June for taxpayers above 5 CR. For taxpayers up to 5 CR, the due date is revised or extended to 12th of July 2020. So Maharashtra, for Maharashtra, date is 12th of July. For rest of the states, for assessees whose turnover is less than 5 CR, date is 14th of July. Okay. Now, one more thing. In the previous slides or for the previous extensions, we have discussed that these extensions are made to section 50 and section 47. However, for the month of May, section 39 itself has been amended. Okay. So your due date for the month of March has been shifted to for the month of May has been shifted to 27th of June or 12th of July or 14th of July. Now that one is relevant because for the purpose of reversal of credit also written for the month of May and June were very relevant. Now waiver in filing GSTR 1. So relief is given up to 30th of June for return for the period of March, April and May and for the quarter 31st of March 2020. Now filing CMP 08 and GSTR 4 for March 2020. CMP 08 initially was supposed to be filed by for the period of ending on 31st March 2020 by 18th of April 2020, which is now extended to 7th of July 2020. GSTR 4, which was supposed to be filed by 13th of April 2020, is now shifted to 15th of July 2020. Other compliances. So these are also important compliances or important extensions for other compliances. That means if at all any kind of notices and all is being issued to you and the due date is for appealing against those orders or replying to those notices, let's say show cause notices, replying to those show cause notices, you have to file those replies within 30 days. So that is now automatically extended up to 30th of June. Also, the orders for which appeal was supposed to be preferred within 3 months, and those 3 months were were going to be expired before 30th of June. Even that has been extended to 30th of June. So whatever the extension, whatever the applications or appeals were required to be filed, or the due date for those has been expired, you can file those appeals by 30th of June. Now, this is not a blanket extension. For certain provisions, this time limit of 30th June will not be applicable. First is chapter 4. That means your time of supply and value of supply. You cannot postpone the time of supply of value of supply. So that's why you cannot say that if my goods were removed on 31st of March or 30th of March 2020, I'll pay, I'll suppose or I'll deem that those have been supplied on 30th of June. That's what Lalit sir was saying. If at all the dealer is trying to postpone the liability, or the supplier is postpone the liability, that would be in contravention of this provision. Then time limit for obtaining GST registration. This time limit is not extended. So if you are liable to obtain a registration, you'll still have to obtain it within 30 days. Okay. Then time limit for issuing a tax invoice. You cannot say that I have supplied the goods, but I'll issue invoice later on once I resume the office. No. Goods should be supported by invoice, and whenever you are trying to remove the goods, invoice must be given along with it. Then other provisions like power to arrest, joint and several liability of the firm to pay tax, penalty of certain offences, all these provisions are due date for these provisions are not extended. That means whenever these provisions are made to be are required to be applied, will have to be applied. There is no extension till 30th of June. Again, for e-way bill, that was issued before 24th of March. See, 25th was the first day of national lockdown, 25th of March. So up to 24th of March, whatever has been issued, whatever e-way bill has been issued, the expiry of those e-way bill has been extended till 31st of May. Everything was closed down. There was no transportation also. So that's why this limit has been extended. Now, e-way bill issued after 25th of March. So first of all, you were not supplied to issue any kind of goods before 25th of, on or after 25th of March, except for essential supplies. So if you have raised or issued an e-way bill, same has to be complied. There is no extension for that e-way bill. Now, compliance is under other identity laws. So all the due dates for appeal, for filing returns, for giving orders has been extended till 30th of June. Now, payment in form GST PMT 09. This form is made applicable under Rule 8713. Okay, so according to this rule, you can transfer the account heads. Okay, you can transfer the amount that is lying in your head of tax, interest, penalty, fee, and any other amount, and it can be utilized only for the payment of IGST, CGST, SGST, and cess. It should be noted that you cannot use amount of tax or amount of interest to pay your late fee or penalty. Okay, this should be kept in mind. Whatever adjustment has to be done has to be made only in respect of payment of IGST, CGST, SGST, and cess. Another important amendment, you can file your nil GSTR 3B. Okay, nil GSTR 3B. In nil GSTR 3B, your ITC is also not there. It is not the nil liability. It is the nil GSTR 3B. So this is the process of filing your GSTR 3B. You will have to send SMS to 14409 in the given syntax, and in this way your GSTR 3B will be filed, and for verification also you'll receive a SMS 6-digit code and that 6-digit code in the given syntax, and that will verify your GSTR 3B. One more important extension is extension of your GSTR 9, filing of GSTR 9, 9A and 9C till 30th of September 2020. So this due date was initially on 30th of June 2020, but this now has been extended to 30th of September 2020. Now we'll have almost common due dates, only a month or so gap between filing your tax audits and your GST audits. You'll be giving your tax audit report for the year 1920 and this GST audit report for the period 1819. Now, one more important amendment is brought with respect to the transitional credit. Finance Act 2020 had brought section 128, which said that for all the due dates, like 60 days, within 60 days this has to be filed, within 30 days this has to be filed, all this has been replaced by within such time. And this amendment has been given retrospectively. Okay, so by this amendment, by virtue of this amendment, government is trying to validate all the extension notifications. The primary extension notification was first issued extending the transitional credit availment period till 31st of October 2017, and then subsequently extended to 30th of November 2017. Okay, so this was the primary extension notification. Thereafter, all the extension notifications were given only for those cases who had faced the technical glitches. Now, say in the CA's office, if you are going to file 20 or 30 odd transitional credit returns, and on the last days or last 2 days you are failing, you are encountering issues even for logging in the GST portal because of the tremendous GST or portal that we have. Okay, the amount of traffic that it can handle. So if you were not allowed to log in those last 2 days, you were supposed to take screenshots of the error that you were facing, and you were supposed to mail it through to the GST portal. Okay. Now, let's say on 30th of November 2017, what genuinely we would do? We would try to file till 11:59 PM of 30th November 2017, all the returns that are pending with us. We will genuinely try to file them. Then how will be able to take the screenshots? Okay, so this is the I would say mocking provision that this GST Council or this government has brought, that people, those who have emailed the errors that they had faced, only those will be able to file the or would be eligible to avail the transitional credit. So and also, like what they had done with the Vodafone TDS case, that they had brought retrospective amendment. Even for transitional provision, they had brought retrospective amendment validating all the credit, or sorry, all the extensions that were given by the government, which were not in cognizance with the law. Okay, so by implementing this provision, that is section 128 of the Finance Act, they are now trying to correct all the wrongdoings that government has done while issuing the notification. So and also there would be many taxpayers who are not able to file their tran credit or avail their tran credit because of the technical glitches of the portal, and they have not taken a screenshot of that. Now, since we all know that that we all know that this was evident. Even the government knows. There are many judgments also which have said that the portal was knowing, the GSTN was knowing about the glitches in the portal. Then why there is requirement of obtaining these screenshots? So I think all these states, I mean majority of the states like Gujarat, then Karnataka, Rajasthan, and Delhi have also Tamil Nadu have in these states people have gone and filed petitions with the High Court. Only the state of Maharashtra is not has not done it yet. So we can think of it if there are there is majority of the transitional credit which is yet to be availed. So we can think of filing a petition against these provisions. Then we'll come to the recommendations of the GST Council meeting that that has happened on 12th of June 2020. So very interesting recommendations. Now it says the first recommendation was a reduction in the late fee for past returns. Okay. So what are the past returns? That is returns for the period July 2017 to January 2020. They have not covered it till date. They have covered only till January 2020. Okay. So what is the relief? If there is nil tax liability, if there is nil tax liability and you are filing these returns, then there won't be any penalty. The condition is these returns have to be filed after 1st of July 2020 till 30th of September 2020. Okay. Returns for the period July 17 to January July 17 to January 20 would have to be filed between 1st of July till 30th of September 2020. Okay. And if there is nil tax liability, then there won't be any late fee. What is nil tax liability? What is nil tax liability? Does it mean I have an outward supply of 100 and ITC of 120? I would say that I don't have any taxable liability, or I don't have any liability, or nil tax liability means I just have input credit and no output liability, or I have or what would be considered as liability. We all know that if output is more than input, then obviously there is a cash liability. I just wanted to say that, does liability in cash means liability, or liability not in cash? That means if it is set off by the ITC also would be considered as liability for the purpose of this benefit. According to me, yet notification as see, it is now 22nd of June. We are setting the meeting to the notifications. Okay, so to my mind, no tax liability or nil tax liability means you don't have any outward supply. So if you don't have any outward supply, but hello, if you don't have any outward supply but have only the ITC, okay, then you won't have to pay any late fee. Okay. Moreover, if your tax liability, if there is a tax liability, that means you are furnishing something. Even if it is one in your outward tax liability, you'll have to pay late fee to the maximum of 500 per return. Okay, 250 CGST, 250 SGST late fee. Okay, so these are the returns for the period July 17 to January, July 17, 2017. Sorry. 1st July 2017 to January 2020. Okay, and these returns have to be furnished between 1st of July till 30th of September 2020. Now, if you have not furnished your return up to January 2020, you will not be eligible to file returns for the period February, March, April, May, June 2020. Okay, so whatever the benefits that are given to you by the government, the first benefit is all these returns, if filed by 30th of June, there won't be any late fee. Okay, there won't be any late fee in a staggered manner, obviously in a staggered manner. Okay, but your return, your benefit for previous return for the previous period, that is up to January 2020, is given only from 1st of July 2020. So if you want to avail that benefit, you'll have to forgo this benefit. And if you want to avail this benefit, you'll have to forgo the previous benefit. Now you'll have to weigh the quantum. Obviously, the quantum for the previous period is going to be more. That means you'll have to see, we still don't have any notification in hand, but whatever the recommendations were given in the GST Council meeting and in the press release, we are talking based upon that. Okay. So if you want to avail the benefit for the period July 17 to January 2020, you will have to forego the waiver benefit for the period February, March, April, May, June 2020. Okay. So this is the position of the law as we have by way of press release. Next. Relief for small taxpayers. So all the small taxpayers were supposed to file the small taxpayers. I would say cover all taxpayers up to 5 CR. So all these taxpayers were supposed to file their returns by 30th of by 6th. In fact, by 12th of July. Okay. So if they are not filing their return by the due time, they would be levied interest. Of course, they will be levied penalty. They will be levied interest also. And however, that benefit has been given by way of reduction in interest. Okay, there is no waiver of penalty. And mind you, penalty is going to be from the initial due date, not the extended conditional due date. Okay, so the penalty would be from the initial due date. Say for February 2020, penalty would start for small taxpayers from 23rd of March 2020. Okay, till the date you are going to file the return up to the maximum of 10,000, including both the acts. Okay, so this is the this is about the penalty and interest or relief to the small taxpayers. Okay, then revocation of cancellation of registration. Okay, if registration is cancelled till 12th of June 2020, due to non-filing of returns, okay, by the officer, then same can be revoked up to 30th of June 2020. The condition is that tax liability should be paid. This is not the condition given in the press release, but your officer will ask you to pay the taxes, okay, and the due interest, and then only will revoke your registration. So all the tax liabilities will have to be paid and interest will have to be discharged. Okay, so your
super गयो तो रबर लाई चाहिए ना.
Okay, so you'll have to deposit your taxes in the cash ledger by way of challan, also the interest, and you will have to show that challan to the officer along with the working that you have done. Okay, the computation of taxes that you have done, and on considering that, the officer would be.
Sorry to interrupt, sir. Sorry to interrupt in between. I request all the viewers to please put yourself on mute mode. Please mute yourself. Okay, now you can continue.
Okay, thank you. Now, all this extension is done. Whatever the penalty is being waived is waived. If all this thing come through by the notification, then what would be the position of ITC? Now, this is a very interesting issue. They have given you conditional extension, or they have given you only waiver, I would say, in payment of late fee. or reduced late fee, whether you can claim ITC for the period 17-18 or 18-19 for the period. So this is a very interesting thing that is going to be there. For the period 17-18, your ITC claiming of ITC limit or date was extended up to 31st of March 2019. And for the period 18-19, your due date for claiming ITC was written for the month of September 2019. So written for the due date for written for the month of September 2019 is say 20th of October or 22nd of October for the respective category of taxpayers. Okay. If this due date, whether you will be able to claim the return or ITC in the returns that you are filing. So this is a very important aspect. There is no extension given for these return of these period in section 39. It is only coming by way of section 47. Okay, it is coming only extension or waiver is given under section 47 and for interest is given under section 50. Right now for the period up to January 20, there is no waiver in interest, only waiver in penalty. So whether we can say that we won't be allowed any ITC which is for the period 18-19, forget 17-18, for the period 18-19, okay, if we are filing these returns today, the due date for claiming the ITC was 20th or 22nd of October 2019. Whether we will be eligible to claim that credit. So this is the biggest issue, because what we will be doing is we'll be considering the gross liability, reducing the ITC, and then making whatever the payment of challan is there, and then only this is how we were going to file the return. But is that ITC what we are taking is eligible or not? So mostly, I think non-compliance of funding was there in most of the cases. I would say because of the unavailability of funds. Now somehow you are going to gather the funds and make the payment of taxes. But now with this analogy, your ITC is going to be denied. Then you'll have to gather the. What if I say today that you have to gather funds for the gross tax liability? So it is going to be a big issue. Moreover, before this COVID-19 period, we have already received show cause notices wherein we had filed a return for the period March 19 after September 19, say with late fee. Okay, department has denied that credit. If the and issued a show cause notice to us. Okay, if your return for the period March 19, which was supposed to be filed by April 19, filed in December 19. Okay, and whatever the credit is there claimed in your March 19 return, even though you have paid the late fee, okay, department is intending to deny that credit and issue a show cause notice to you that why you have taken this credit. Okay, so this litigation is going to come. Definitely, it is going to come. It is an open point in law. Okay, and never settled. And I think it is not going to settle also, because this kind of availment of credit. Okay, is going on since ages, even from the excise and service tax regime also. That what you consider is the due date for claiming an ITC. Okay. Now, this being a conditional extension, I still feel that there would be a officer in the department or authority in the department that would ask you to disallow or consider this credit as ineligible and reverse the credit. Okay, so this litigation may come up. For this, I have been giving these case laws since I don't know how many lectures I have taken with respect to ITC, but I have always given these two case laws, which I think, or I have relied in my submission to the department, which says if I am paying a late fee, that means something special. I am receiving a special service from the department. And if I am paying a late fee, I am receiving some special service from the department, or I would say that I am compensating the department for whatever the hardship the officers would have faced due to late filing of return by me or processing of the late filed return by these officers. Okay, so if I am paying the late fee, it would amount to regularizing my return. It would amount to regularizing the return which I have filed. So if I am paying the late fee, for the period July 17 to January 2020, whatever the amount is, now they have reduced it to 500. Okay, so even they have reduced their consideration. They have reduced their consideration for the special services they are giving to us. Okay, but consideration is there. Consideration is there. That's why if I according to me, if we are paying the late fee, we should be allowed the credit of all the input tax credit that is there in the return. This is what I feel, and I would submit to the department whenever the case would come up. Okay, so this is going to be important for the year 17, 18 and 18, 19. More so ever, I would also bring into light the matching provision GSTR 2A with the books of accounts or the ITC claimed. Okay, GSTR 2A for department, we would say GSTR 2A with your ITC claimed in 3B. Here you are giving extension for filing the returns, okay, or you are allowing or accepting the returns for the previous periods. Now, between 1st of July 1st of July 20 to 30th of September 20, you are allowing us to file return for the period July 17 to January 20. Okay, so if you are allowing us to file those returns today, why you have issued me a show cause notice under Rule 36(4) for the period or for period up to December 2019? We have already most of you must have received this mismatch notices. Why are you issuing those notices? Or how can you issue those notices when you yourself have extended the time limit for filing the GSTR 1 or say GSTR 3B? So that's why I feel that Rule 36(4) in any case has no applicability to the present scenario. More so ever in the absence of GSTR 2A, GSTR 2. If there is no GSTR 2, Rule 36(4) is irrelevant. Yes, Rule 36(4) would have been relevant if the new would have been relevant. I'm not talking about the extreme relevancy. I'm talking about maybe it would have been relevant if the new return filing system was brought into picture. Your Annexure 1, Annexure 2, if that was there, then this thing could have been possible. Otherwise, I feel Rule 36(4) has got no applicability in the current situation or in the light of the current act that we have. Okay. Then there were some interesting advance rulings. Okay. I don't think we should pay much attention to the advance ruling. Only relevancy of this advance ruling is that we must know to what extent department can think. Okay, department or the advance ruling authorities have made director remuneration taxable in two of the cases. In Karnataka advance ruling in case of Alcon Consulting Engineers and Rajasthan advance ruling authority in case of Claycraft India. Okay, they said first Karnataka ruling said that director remuneration is not covered under clause 1 to schedule 3. Schedule 3 of your GST Act says employer-employee relationship, there is no GST. this advance ruling says that directors' remuneration, even though it is, even though there is TDS is deducted under Section 192, okay, of your Income Tax Act, it won't be considered as a relation between company and director as employer-employee. That they are questioning the relation. Now, Rajasthan ruling, advance ruling says director is not the employee of the company, similar to what Karnataka authority said. However, 2-3 extra points. See, Section 192 of the income tax was not brought into picture in Alcon Consulting Engineers. Okay, but it was brought into consideration in front of the Rajasthan Advance Ruling Authority. It said contention was made that we are deducting TDS under Section 192. Okay, director of the company is on the roll of the company. They also submitted that there is two type of directors. Okay, so whatever the salary is given to the executive director of the company. So executive directors are considered as the employee of the company even by the Companies Act. Okay, so however, Rajasthan Advanced Ruling Authority denied all the contentions and said that director is not the employee of the company. So this is what department is saying. Okay, later on, department itself is issuing a circular and saying director's salary, which is subject to TDS under Section 192, is not liable to GST, but remuneration subject to TDS under Section 194J is liable to GST. Now, it won't surprise me if someday there is a contract between company and director on principal to principal basis, okay, wherein director is supplying, say if it is a construction company, okay, or a government contractor, and director is supplying a JCB owned by it along with the driver, and getting principal to principal remuneration from the company. TDS would be deducted under Section 194C. Now, someone might come and say that circular speaks only about Section 192 and 194J. There is no mention about Section 194C. This is, I am not very good with income tax, but still I feel that those cases are liable to be, GST is liable to be deducted under Section 194C, or at the max, if I am wrong, it would be under Section 194I. So someone would say that this circular is not covering those scenarios, and that's why there won't be any charge of GST on in that condition. Mind you, reverse charge notification number 13 of 2017 says whatever the remuneration is being paid to the director shall be liable to GST. Okay. Now, with the release of this circular, it is very clear that salary to the director is not liable to GST. However, there would still be questions on the other like sitting fees and other on principal to principal basis contract, which were whether GST would be leviable under reverse charge by the company. Okay, this question is important with respect to reverse charge that company has to pay on any kind of services that it receives from the director. Okay, so, and one more important thing with regard to the advance ruling authority, okay, is advance ruling is applicable to the applicant itself in the state where it has applied. I would say if I have two registration, one in Maharashtra, one in MP, I have applied to the Maharashtra advance ruling authority and sought some decision which is not in favor to me. My GST registration in Madhya Pradesh is free to exercise something which is not in accordance with this ruling. Okay, so basically your advance ruling is applicable qua applicant and qua registration. Okay, and qua transaction also. It is applicable if it is applicable to one transaction. It is made applicable to one transaction. Similar analogy cannot be derived in some other transaction, some other question that is framed. Okay. Now, one more important advance ruling, or I would say advance rulings which create havoc. Okay, is advance ruling in case of Nurseryman Cooperative Society Limited. Okay, in this advance ruling, exemption benefit under serial number 3 and 3A of notification number 12 by 17 as and when amended. Okay, 3 and 3A is works contract exemption notification. Okay, as given in 12 by 17. It speaks about exemption on services that are provided, works contract services that are provided to government, local authority, governmental authority, or government entity. Okay. Now, if I am receiving, I am the main contractor, I have applied for a contract, I have been given a contract, okay, by the government, okay, and I am subcontracting it. Okay. If A is giving, A, the government is giving contract to B, the contractor, and B, the contractor in the subsequent event is giving contract to C on subcontract basis, then this advance ruling says C will have to charge 18% on works contract services to or whatever the charge is there. Okay, not necessarily 18%, it could be 12% also. Whatever the charge is there to B, the main contractor, and B won't charge anything to the government A. Okay, because it is an exempt service under notification number serial number 3 and 3A. So basically, this advance ruling says subcontractor is not exempted if it is providing works contract services to main contractor relating to the services relating to the government related services. Okay. However, since ages, even the service tax laws, we were taking exemption for the subcontractors also. If Ashoka Buildcon receives a government contract for construction of a road and it sublets in patches, roads are being constructed. So if lets off a patch to someone for constructing that particular patch, okay. So in service tax, we used to claim exemption for the subcontractor also. This exemption was eligible even before an entry, a specific entry was brought in service tax laws, which said that excuse me, that services provided by the subcontractor would be exempt if services provided by the main contractor are exempt. Okay, this is the specific entry that was brought into mega exemption notification 25 by 2012. Okay, so even the courts in various decisions have said that what work is being done, work is done, this road constructed by the subcontractor is evident that this is the road which is constructed for the government, then why the exemption benefit should be denied to the subcontractor? Okay, so it was very clear position of law that subcontractors would be given the benefit that main contractor is availing. However, the advance ruling authority of Karnataka again has said that interpretation of law should be very strict, exemption notification to be strictly interpreted strictly. Extraneous factors cannot influence determination of person's eligibility to exemption notification. Basically, this advance ruling has denied benefit to the subcontractors. Mind you, again, this is a very litigative proposition. Okay, definitely these guys are if these guys do not follow this, there would be show cause notice to them, and then they would litigate, and in the court they'll definitely get the relief because of the practices that have been going on since ages, since the service tax laws. Okay, so this is a very absurd I would say advanced ruling that has come. Okay, one more advanced ruling we'll discuss and then we'll close it. Okay, one more advanced ruling is of Marquee Spaces Private Limited, again given by the Karnataka Advanced Ruling Authority. Karnataka Advanced Ruling Authority is very intelligent. The most the most controversial advance rulings are given by the Karnataka ruling authority only. Mostly, I would say, most of the this uh, controversy is created by Karnataka advance ruling authority. In the advance ruling of Marquee Spaces Private Limited, under a joint development agreement, landowner give rights of using land to the developer, in exchange of which developer gives services of developing land of owners. Activity of developing land and supply of services. It has said that it has said that it would be taxable. Now, what happens under a joint development agreement? I am discussing these advance rulings because these advance rulings have also been affected during the COVID period, and I think it is important because this advance ruling is about plotting. Okay, joint plotting. I have a land and I am appointing a developer. Okay, who is constructing, who is doing plotting on that particular land, getting the NA certificate. Okay, if it was agriculture land, getting an NA certificate for it, and then constructing road, making plots, growing plants, and all the sewerage thing and everything is being done by a developer. And then what happens that he gives me right to sell 12 plots out of it, and 12 out of 20, let's say, out of 100, let's say 12 plot I am getting, and 88 plot he is getting, or let's say 20 plots I am getting, 80 plots he is getting to sell. So this is a joint developer agreement. I am a landowner, he is a promoter developer. Okay, we come together. Okay, my land, his development. Okay, I get certain portion of land to sell. To sell, he gets certain portion of land to sell. Usually, this share of land that a landowner, in case of a plotting business, I'm saying, in case of a plotting business, is more than what the developer gets. Say the ratio could be 50-50, 60-40, 70-30. So in this case, this is a joint development and something which is, and ultimately what is happening is the supply of land. Two people have come together, one has brought land, one has brought development into it, now they are selling it. Okay, and as per the agreement, whatever the remuneration is received by the developer whatever the remuneration is received against sale of land, both by the developer and by the landowner. So it won't be chargeable to GST as per Schedule 3. However, this advanced ruling authority says there is one more element in this, that developer is developing a land and then making it available for sale. So this should be a development contract and development services received by the landowner. So this is again very absurd, because normally what happens in a joint development cases, these are, let's say, two partners. Both of them are bringing some capital into the business, and then they have a profit sharing ratio defined. Okay, so it cannot be that landowner has appointed developer to develop something for him and then giving him a consideration. No, it is not the case. It is joint development agreements are the cases which is as good as partnership, wherein a developer brings in the development of the land and landowner brings the land itself, and whatever the final product is, okay, it is being sold as it is going to be sold as land only. Okay, which is not which is out of the scope of GST. That's why again this advance ruling I feel is absurd, because it is going to charge something which two persons are bringing as a, you may say, as a capital into the business, and capital should not be made taxable. Okay, so the development thing should not, development is what a developer is bringing. Okay, so it is not giving the services to the landowner, and that's why I feel there is no element of service and this should not be made taxable. However, this Karnataka Advanced Ruling Authority has on that aspect of the transaction and tried to make it taxable. Development rights, as we know, and in fact, all the land related agreements, the real estate issues, as we say, have got a plethora of judgments, and still there is no clarity. It is still a gray area. But and highly debatable. I mean, in fact, what I am saying, there may be contrary views in the minds of the listeners. Okay, so this is a gray area, and whatever I am saying is supported by a judgment. Whatever you may be saying must also be supported by a judgment. So, as far as the relevancy of this transaction is concerned, I feel the ultimate transaction is sale of land done by two separate persons. Okay, coming together, it should not be made taxable. The arrangement between the two person should not be made taxable. So this is again an advanced ruling authority judgment. And one more important advanced ruling authority judgment is of Gaurish Sharma. Now this is a very important issue and commonly faced by a lot of the chartered accountants who have got government contractors constructing say dam or bridges or roads. Okay, they have to as a part of the contract, they have to bring in, say, a generator. Say in this case it was 11 kV NLT. Okay, so these are the elements that government contractor has to do in order to complete the contract that he has been awarded. Okay, so in this case, the authority has said that construction of 11 kV and LT by a contractor is not at all related to the main contract that was awarded to him by the National Highway Authority of India. So, considering these two contracts separately, benefit won't be given to the contractor for setting up a plant or 11 kV and LT lines, which were very necessary for the completion of the highway contract. Okay. So again, this is a very, I feel is a very absurd decision, because to complete A, you'll have to complete B also, which should be treated as part of the whole agreement. It should be a composite agreement of two portions. So benefit of constructing benefit should be given to the contractor if he is doing something as a part of something to complete the main contract he has been awarded. So this advanced ruling authority has denied this kind of exemption, but as I say, I am of the opposite view in this case also, and we should see that this case is was applicable only to Gaurish Sharma, and in the state of Rajasthan, this has no nexus with the Maharashtra. It is a case specific and CC specific case, and obviously there is going to be litigations, many litigations in this regard also. But we'll have to take a stand in this case, and most of the amount, in fact, I won't say most, but a huge amount is involved in such kind of contracts, and the element of tax. If we say if a services is being provided to a government, it is at 12% rate. And if you are going to, out of 10 crore, suppose on 3 crore element, you are going to charge me 12%, then this is certainly going to affect the profitability of the contractor, which I feel was not required. Okay. So this is one more important advanced ruling and I think 25 minutes are left as of now. And thank you for your patient listening. And let's move on to question and answers if you have any. Thank you. Thank you very much.
Okay. Thank you, Aditya sir. Okay, now I would like to invite CA Ganesh Ettal sir and CA Lalit Tambi sir on the panel, so that we will have a query session, resolving query sessions. Sir, you please unmute yourself.
Lalit sir
Tambi sir and Ganesh Ettal sir, please unmute yourself. Thank you, sir. Lalit Tambi sir, you also unmute yourself, please.
Yeah. Yes. Am I audible?
Okay. Okay.
Okay.
Yes, sir, you are audible. Okay, so I will. Yes, sir. Okay, I will read out the queries, and Aditya sir, you also with us?
Yeah, I'm getting. Please.
Okay. So just a minute. Okay, so one query is, please tell something about reversal of ITC as per Rule 43.
Okay. So I think this is actually, it is not the part of our presentation, but what exactly, if you want me to elaborate the entire Rule 43, it requires a separate session in itself. Okay. So Rule 43 is completely based on formulas, and we have to segregate what input is being specifically applied to the taxable transaction and what input is specifically being applied to the non-taxable transaction. After segregating this thing, whatever the leftover is there, you'll have to divide it or make a proportion of it, and based upon the value of your taxable supply and exempt supply. So this is the ratio which you will apply to the common credits only. Mind you, this is only Rule 43 will be applicable, is more relevant for the common credits only. So if there are common credits, you will bifurcate them in the proportion of your taxable output and a non-taxable output. You can do it on monthly basis. Otherwise, you can also do it on yearly basis. And this June return would be your final return to reflect those reversals. Okay. One more thing is there's a difference with respect to capital goods. If you are having any kind of reversal with respect to capital goods, whatever the credit that you have taken on capital goods, you'll have to divide it in 60 months, and month by month, then you'll have to consider the reversal. You can definitely avail the entire credit at the first go, but then for the purpose of reversal, you'll have to divide that credit in 60 months. One more important thing is I want to mention with respect to Rule 43. Rule 43 is applicable only when, according to me, is applicable only when you take or avail common credit. If at the first go itself, if you have divided, if while taking the credit only you have segregated on the basis of some scientific formula that this much credit is applicable or is eligible for your taxable output, then there won't be any applicability of Rule 43 at the time of selling the output, or there won't be any reversal as such. This view is uh, favored by the judgment of Honorable Supreme Court in case of Chandrapur paper mills also. So this is with respect to 43. I won't take much because Rule 43 in itself will require a session. Thank you.
Shraddha madam, read the next question, please. Hello. Shraddha madam.
Hello, sir. Shraddha madam has left the session.
Okay, no problem. I'll reading the questions. Saket bhai.
Sir.
I think this is your question you ask.
Okay, sir. Aditya bhai, I want to, sir, ask one question. Hello.
Please go ahead.
Before the lockdown, the department had issued the notices for the non-payment of interest on delayed payment of GST. In that, I have two questions. If the payment of tax is done via electronic credit ledger, then on what amount the interest will be levied, whether on gross amount or net basis?
Okay, very good.
And the second question is that if payment is done via cash ledger, then what stand we could take to avoid the levy of interest of the dealer?
Okay, very good.
Now over to Aditya.
I think this issue which has been brought up by you is held by the GST Council meeting, 39 GST Council meeting and recommendations thereof, which says that interest will be levied on net tax liability only and with effect from 1st of July 2017. So if if you have made late payment by way of that means you are having enough credit in your ledger, your output was less than your input tax credit. So in that case, I feel there won't be any interest liability. But mind you, there should be enough credit in your ledger. If you are filing return late, if you are filing return late, that means you have availed credit late. Okay, so in that case, late filing of return, because of late filing of return, there would be implications of interest. Just because you have filed return late, you have something which is going into a credit ledger is coming on a later date. That's why in that case, I feel your interest liability would be there. Now, another second thing that you have asked is with respect to the cash element. So if you are already having the input tax credit in your hand, okay, then there won't be any the interest would be applicable only on the cash portion, that is the net liability. This is very well explained by press release dated 14th of March 2020 by, of the GST Council. Thank you.
Okay.
Aditya, next question is what if GSTR 1 is pending for the quarter 3 or quarter 4?
Of year 2019-20.
They have not written that, but
Okay.
I suppose.
So what if it is pending? Then you must file it. I mean, I don't understand the question. It is not complete, I think. What if, is it with respect
I think
to RTC?
he is asking in the context of penalty might be.
So, yeah, penalty.
Now he has written 1920.
Sorry?
Okay, 1920, Aditya.
Quarter 3 and quarter 4 of 1920. If it is with respect to penalty, we will have to wait for the notification with respect to period up to January 2020. Okay, that means which covers your quarter 3 of 1920, because notifications that return excuse me, return for the period up to January 2020 would also be covered, and there would be some kind of waiver in it. We'll have to wait for the notification. As of now, there is only a press release. And with respect to the quarter 4, there is a specific notification which has said that it will be your all pending GSTR 1 for the period February, March, April, and May will have to be filed by 30th of June. So your quarter March is already covered in there.
Thank you, Aditya. Next question is from Bhagyashri. Now, as the date is extended for the month of July 17 to January 23 returns, if I have filed any return for availing ITC after 30th October of succeeding year and received the notices for the same for the non-availability of ITC, whether such notice will be stand valid as of now?
This is what I had actually discussed in my presentation also with respect to ITC. See, extension, this is not a extension under section 39. This is what we'll have to understand first. This is a conditional extension, we may say, which says you won't be levied any penalty, or you will be given the benefit of the reduced penalty if you file your returns between 1st of July 2020 to 30th of September 2020 for the period up to 31st of January 2020. Okay. So for these periods, benefit of reduced penalty is given. But mind you, availing your ITC is restricted only for is restricted till the return for the month of September for the subsequent financial year, due date of return for the month of subsequent financial year. So if you are getting notices in that regard, then department is valid on its part to issue you a notice, and they can deny your ITC if it is availed after 20th of October or let's say 22nd of October 2019. However, you may have to litigate this case if the ITC amount is substantial. Then you may litigate this case on the basis of the case laws that I had given, and there must be many other case laws also. So you'll have to litigate this that since I have paid the late fee, you should allow me the extension. You should give me the credit also. Thank you. Vipul sir, I think you're mute. Yeah.
Yeah. Okay. Sorry. If you have already cancelled the GST number and cancellation order received from the department, can that cancel number be now revoked? I think this is in respect of voluntarily cancellation by the GST dealer.
Correct. So this is whatever the extension is going to come or has been announced earlier also in the previous GST council meetings. It was only with respect to the suo moto cancellation. That means cancellation on part of the department due to non-filing of returns and all. So this is not with respect to the voluntary cancellation of registration.
So cannot be revoked, right?
As of now, see, we are all awaiting the notification, but as of now, whatever the intention of the government is, it is only for the suo moto registrations.
Okay. I think there are no more questions, Aditya. So now I request Ganesh Atal sir to give his closing remarks. Atal sir, over to you. Yes.
Thank you, sir. Thanks to Chairman, sir, executive members, the branch members, and the speakers, Aditya Bhai. Aditya Bhai, hello, are you audible? I am audible, sir?
Yes, sir, definitely.
Aditya Bhai already explained all the circulars, notification, the recent judgments, advance ruling in a very practical way and very easily for our daily implementation of GST. As far as one of the regarding director remuneration, just I like to add that regarding RCM on 194C, I think that on 194C, the activities which are performed by directors may not be liable for RCM because they are as a business activity or any other activity. These activities are generally not covered under 192 and 194J. So they may be business activity or other than business activity. GST is leviable or not may depends on the activity only. Aditya Bhaiya already explained large number of cases, various issues, composition delay, matching of 2A and other things. I am very much thankful to the branch for giving me this opportunity. I am forwarding this to Vipul sir, chairman of the branch.
Okay.
Yes, Radha, ma'am, continue.
Okay.
Excuse me, I'd like to add, even though closing remarks have
thank you.
Shraddha ma'am, give me a moment, please. Even though closing remarks have been given by the chairman, sir, and I should not be taking any more time, but I would just like to clarify on this part that if we go by notification 13/2012, it has clearly said that the remuneration which is being paid to the director is liable to reverse charge. Okay, so all the agreements, if it is a case where remuneration is being given to the director as an executive director, that means a salary. Okay, so only salary is be exempted. Okay, only salary won't be liable to reverse charge. Otherwise, whatever the cases, whatever kind of agreement that you are having with the director for supply will be liable to reverse charge by the company. Okay, it is with respect to the reverse charge on all the services that are received by the director. According to me, whether such services are taxable or not taxable is irrelevant for the purpose of this notification. Thank you.
Okay. Thank you, Aditya sir, for such an excellent presentation. And your knowledge is clearly visible that even after the closing remarks,
I think there is some technical issue.
further, last but not the least, out of thanks.
Yes, madam, please continue.
Hello, I
Yes,
was not audible.
please continue.
Okay. Now I request CA Sunil Salampuria sir to please with the vote of thanks.
Thank you, madam. Thank you, Shraddha, madam. I am audible?
Yes, yes, sir.
Yes, sir. Yes.
On behalf of Amravati branch of WIRC of ICI, I, CA Sunil Salampuria, Vice Chairman. First of all, thanks to our Chairman, Sir CA Vipul, Sir Patel, Sir, who have kept this VCM on GST updates and inherent issue, the current need of our hour. Also, thanks to today's speaker of our own branch, CA Aditya Khandelwal, for making excellent presentation and explain with various due dates and case study and making this seminar interesting and meaningful. And I would also like to thank CA Lalit Tambi sir and CA Ganesh Hattal sir for their valuable opening and closing remarks. I am happy to express my vote of thanks to our today's MOC member, CA Shraddha Agrawal, Madam, and CA Bhagyashri. I would also like to thank the coordinator of today's VCM, CA Saket Mehta. Finally, I thanks to all the members who have participated and making this VCM successful. Sir, I have take your attention that today we have CA Ajay Kumar Gupta. He is from Bhatabara, and also Sonali Goyal. He is from Punjab. She also connected with us, and many members of Paratwala also there. Thanks to Rajeshwar Joshi sir and
There is
Swapnil.
one member from Raipur also, sir, today.
Huh?
There is one member from Raipur also.
Yeah. One member, Saurabh Kela ji from Raipur also, and Shegav from Ashish Tibdewala also. I thanks to past chairman Rajesh Ratan Sharma sir, Rajesh Chandak sir. They also have joined us. Thanks to all.